Now, Mozambique's Monetary Policy Committee has decided to maintain interest rates at 9% following last month's cut of 50 basis points. The committee also decided to intervene in the interbank market to ensure that the monetary base doesn't exceed 42 billion metica by the end of this month. Now, joining us now to discuss these decisions is Omar Mita, who is Chief Economist at Millennium BIM. Good morning, Omar. Let's just first of all talk about that decision to keep that interest rate on hold and give us the factors that would have influenced them.
Good morning. I think that the factors that have influenced the decision from the central bank is the fact that we have seen some inflationary pressures surging into the economy. If we look at the data that was released recently, 4.86% was the year-on-year inflation, which was caused mainly by the increase in food and fuel prices. And also, as far as Maputo is concerned, which is the main city in the country, we had around 5.2%. I think that we see there are some inflation pressures, and the central bank has realized also that there are second round effects, which are lagged effects of monetary loosening, which they've been undertaking since late 2012. So it appears to me that we have reached a point where monetary loosening is no longer a choice for Mozambique, given the fact that this is now entailing higher pressure in terms of inflation and the pro-growth. I think that the other thing which was probably in the mind of the Monetary Policy Committee members is that they need also to maintain some growth of the economy. Actually, credit grew by 28% in May year-on-year, which means that demand has increased as well, because most of the credit goes to consumers for the purchase of durable goods, which means that there have been some pressures from the aggregate demand side as well. So, keeping on hold the interest rate means that they wouldn't like to see the second round effects going up. And secondly, because we've seen that early this year, due to the floods, there has been a kind of a downside revision of the growth of GDP. And also we have seen that, for example, companies like Rio Tinto, who have accounted for impairments in their coal reserves, have indicated that they might exit the country. And secondly, and the third factor could also be the fact that Renamo, which is the opposition party, there were some issues related with the peace accord, and they did attack actually the rail in Sena, which is the main exit port for the coal. So we see that there are some factors which have weighed on the central bank not to loosen further because of the inflationary pressure, but at the same time not to tighten at this juncture because they would like to counter those negative effects which might imply a moderation in the growth rate of GDP